All right, so you've decided to dive into the stock market. Congrats! But now, you're staring at a chart full of tiny rectangles and wondering, what on earth is this candlestick stuff? Let's break it down. Candlestick charts basically tell the story of price action, whether a stock is going up, down, or just being lazy and not doing much. Think of each candlestick as a mood ring for a stock. Sometimes it's happy and climbing, and sometimes, well, it's in a bad mood and crashing. First things first, each candlestick has a body and these little things sticking out of the top and bottom called wicks. Now, if this was a cocktail, the body would be the glass and the wicks, well, they'd be the straws. Easy, right? If the body is green, the stock price went up during that time. It's like saying, hey, people were feeling this stock. If the body's red, it means the price went down. Kind of like, man, people lost interest. Now, those little wicks, they show the high and low prices during that time period. Imagine the stock saying, I try to go higher, but then I got tired. And yeah, I dropped lower too, but don't worry, I bounced back. So green body, stock's feeling good. Red body, not so much. And the wicks? Just the stock bragging about how high or low it could go. Now, let's throw some fancy terms at you to impress your friends. Bullish and bearish candlesticks. A bullish candle is green, showing the stock closed higher than it opened. Think of it as your overconfident friend at the bar who leaves with more than they came with. A bearish candle is red, which means the stock closed lower than it started. That's your buddy who gambled away their rent money by midnight. Okay, now for the fun part, patterns. You don't need to be Sherlock Holmes to figure these out, but they do give you clues about what might happen next. The hammer. This one looks like a hammer. Go figure. It's got a short body and a long lower wick. This usually happens at the bottom of a downtrend and signals a reversal. Picture the stock saying, all right, I've hit rock bottom. Time to turn this around. The shooting star. Imagine a candlestick with a tiny body and a super long upper wick. It's like, yeah, I try to go higher, but nah, not today. This usually means a reversal might be coming after a strong uptrend. The Doji. The stock's equivalent of, I don't know what I'm doing with my life. The body is super small, meaning the open and close prices were almost the same. It's indecisive, could go up, could go down. Flip a coin at this point. So to sum it up, green equals up, stock's in a good mood. Red equals down, stock's throwing a tantrum. Wicks show the high and low for the time period. The stock's bragging about its highs and lows. And if you see patterns like hammers, shooting stars, or doji candles, pay attention because they're like the stock market leaving clues. Very subtle clues, but clues nonetheless. And there you have it. Next time you're staring at a stock chart, you won't be just looking at random shapes. You'll be reading the market's mood swings like a pro. Or at least like someone who knows the difference between a hammer and a shooting star. Happy trading. And remember, folks, candlesticks might not light up your room, but they sure can light up your portfolio. If you enjoyed this, hit subscribe and stick around for more fun and easy investing tips. Your future self will thank you. And hey, maybe we'll even help you avoid another shooting star moment. See you next time.